What's going on, everyone? Welcome to our April 21st This Week in Crypto. Here with Maxim. It's been, excuse me, it's been a bit of a market retrace this week. Kind of expected. You know, we want to give ourselves a pat on the back. We did mention that this was the likely scenario based on a lot of bearish divergences from last week. But Maxim, how are you doing? How's every thing on your end, and what have you seen on the market end of things?
Things doing well. Yeah, but even if expected, it's still every time like a new time. And it's also amazing how human mind we adjust after things happen. We rationalize everything. Mm-hmm. So this we share, each of us. There is no difference. What might be difference in the way how we look into the data metrics beforehand. Yeah, what we try to analyze, trying to predict, but the experience, what we feel when the market moves, I think we share more or less the same. So was a bit, of course, unpleasant feeling to go and see the market going down. Now again, but all the time was very excited and interested. Yeah, so because the moment when market moves, this is the interesting moment, right?
Absolutely. Yeah, there's you know, especially altcoins, they're really getting hit hard, and that has changed trader perception a bit. You know, Bitcoin and Ethereum, they have been holding up a little bit better. At the beginning of the week, Bitcoin dominance was really showing a lot of strength. In the recent days, Ethereum actually was leading the pack for a bit. But either way, I mean, the majority of the assets here, there's quite a bit of retrace. You know, on the year, prices are still far above where they began, but you know, there is some concern that inflation is still heating up. Interest rates could have a couple more barrels in them to push equities prices down. And you know, overall, I've seen that the trader sentiment has shifted a bit. You know, we put up this poll yesterday to see what people think would be happening next year. You can see we asked, Bitcoin currently sits at 28.3K. What's the most realistic next step for Bitcoin? 28% said 30K is coming back next. 39% of people said 25K is coming next. And then we have 23% saying boring ranging and 10% saying pain. I think that this is clearly a reflection that FUD has emerged a bit, and it's probably the most FUD that we've seen since the opening weeks in the year, when everyone was still in 2022 mode. Yeah. And showing a lot of nervousness and doubt that prices would jump in any reasonable fashion.
That's true, but also I keep reading, especially in Bitcoin related Telegram channels, halvings coming, 100K, let's go to 100K before 1 million. There is still plenty of bullishness. I think it has to be removed. Mm-hmm. But for the short term, I tend to agree with you. It looks like we get to the bottom of the current drop. I would prefer for the next, I don't know, day or two, relief rally. That's to my eye, looks to more probable scenario, but I cannot exclude we just continue going down. Yeah, that's true. That's true. Just especially so many people expecting 25K, 26 for Bitcoin right now, like a very next stop. What you saw in this tweet, but also on others, makes me believe it will not happen now. It might actually happen a little bit later, yeah, but first relief rally. And then we'll see the moment we have relief rally, does it bring bullishness and this halving expectations immediately back? Mm-hmm. If, yeah, then we'll see. Based on the direction is defined not by what's happening now, rather, but what will be mode and metrics in 2 days, especially on weekend. We tend to be, when market is as volatile as we have now, over weekend we might experience quite wild moves. And this is a good Sunday evening, Monday lunchtime. This is where we need to check. But we will, I bet you prepared something. We can revisit these things. We can also share some learnings. I don't know, the last piece I was writing or I wrote when I was in the conference about former game actually published relatively shortly before the dump. If even I didn't make any call, so I cannot claim it for me that I predicted the dump, but we shared some setup and framework. I think I wrote it on Sunday, so you probably didn't share it yet. So there was this piece, we could revisit it if you have time. And then there is one, especially as a follow-up, one metric which seems to be leading for the current dump, very strong. It's usage of network, the Ethereum network, for scammy, half scammy, or typical formal projects like Pepe. We've seen amazingly increased gas fees, which always correspond to the top. And this time, this metric was the one which kicks off, because it was the one which reflected strong formal. Here, what I wrote here, our typical set of metrics, we always look into it. And I think I will include this gas fees into framework also from now on. Seems to be very important. Well, it was on our list, but I didn't include it there. And you can open another insight, which I think Gary wrote. Just share. We can share the link, this one, because it's rather long and it's interesting to read. Yeah. Yes, I think this one. Yeah. This is what I'm talking about. Yeah, this picture. And if you scroll down, so this chart has to be on radar of every crypto investor. The moment you see so insane increase of gas fees, you need to investigate what's causing it. And then you will see the previous chart, which we spent actually 2 days with our team analyzing exactly. Typically, it's a wrapped up, of course, Ethereum, USDT, USDC, DAI. And for a few days, it was random tokens. Pepe is the most known one, but there were 8 others, which is very ridiculous and clear sign that retail is being wrecked. Someone is manipulating and taking money out of retails. And this usually happens on the top. Yeah, and you can monitor it in different ways. One way, retail accumulation, or another way, super activity of super scammy projects, which gets traction and attention. And this is what we got at this top. Interesting. Will definitely be a constant part of our framework now too.
Yeah, I guess from my understanding, these unknown addresses were a lot of new, freshly introduced assets like Troll, Aped, Bobo, a lot of meme kind of names out there. And that typically is a sign that we're getting a little bit toppy. You know, when we see these kinds of names pop up, it's a lot of times coming near all-time highs during big bull markets where investors think that investing in anything will be profitable. And obviously, we haven't been in this huge bull market, but relatively speaking, 2023 so far has been a pretty positive gaining window of time. So I'm not surprised to see that opportunists are coming out and trying to introduce a lot of assets, and apparently they've been high on the fee distribution list too.
Yes, we always measure top extreme irrational level of greed, and this is the one. You can see it right on this chart. Others were kind of not extreme, except divergences. They were extreme for a long time, but divergence is the kind of metric. The moment it starts emerging, you get alerted, but it can take, and we saw it this 2 weeks, it can develop over weeks. yeah, and then it's like abruptly dropped. So the moment you start seeing divergences, you get alerted. But the final trigger, in this case, it was Pepe. Pepe. Well, it's actually quite ironical, yeah.
Yeah.
Pepe destroyed the market. No, why not?
And look,
This is what Pepe is doing, yeah.
Pepe is #1 on our top
Now it's
10 hourly trends.
Everywhere now people saying that, look, this guy made out of, I don't know, $100 1 million or $120 1 million. Exactly. Still greed. No one said how much he lost before it. Yeah, maybe he lost a few millions. You know, classic how you become a millionaire, you invest 10 million.
Right.
So yeah, and now it's a definition focused, concentrated level of greed, which has to be destroyed before we go further. It has to be removed. People will lose money. I'm sorry, but market always work like this. The moment you have greed, it's a fever. It's a hot. It has to be cooled down. And later on, when you see the metric, check metrics of actually gas fees, you will see how it's cooling down. Also circulation cooling down. You will see it. It will start cooling down. And depends on the velocity, how we cool down. You might get there sooner or later. But the market has to cool down. Yeah. And that's what it's doing now.
Yeah, that makes sense. I mean, looking at Pepe, it's all over the place. I guess Telegram, not so much, but Reddit, Twitter, and 4chan, of course, they're all having huge surges of Pepe mentions. That has to be a bit concerning. When a meme is #1 and getting all-time high mentions, we have to be a little bit careful during this time because it means the crowd is not moving in an organic fashion and people aren't taking it quite as seriously as they normally are. But shifting our focus here, Maxim, for a minute, take a look at what's going on with the correlation between Bitcoin, the S&P 500, and gold. You can see that Bitcoin kind of slipped past what the S&P has been doing over the past week or so. Especially right here, we had this big drop in Bitcoin's price while the S&P kind of stayed sustained over the weekend. And yes, the S&P has slipped a tiny bit, but not quite as much as Bitcoin. If we just look since this peak here, we'll go back to the 13th, so 8 days ago. Bitcoin's down 9.1%. The S&P's down just 0.4%. Gold down 2.2%. So yeah, it looks like, you know, if there is a correlation, which I still think is there, it is lessening a bit as the S&P is kind of getting a bit on the boring side in the moment, while Bitcoin's volatility has kind of continued. And I think it's something to keep an eye on. You know, we had this big correlation between Bitcoin and gold for about a month after the banking crisis was announced, and that's kind of gone away now. And it looks a little bit more like, you know, each is kind of fluctuating on its own at the moment, which is a good thing. We want to see that there is very little reliance between Bitcoin and what's going on other sectors at any given time. Those are the times when bull runs tend to be the most prevalent.
Yeah, and keep in mind, it's much easier to move crypto market. So whenever market sense, there might be flip in Fed monetary politic. It will try to exploit it. And in crypto, it's quite often it's easier in both directions, up and down. So now it's might be the same destiny expect SAP, just takes a little bit longer.
Absolutely, yeah. I think we can also look at what the whales are doing right now, as we always try to do when we check in on, you know, some of the key indicators that point to where markets are going to go next. And we've got a lot of lines here, but our 10 to 10,000 Bitcoin line is always a good thing to check in on first. And it's showing that we're continuing to slide down a bit. You know, the long-term trend is still less and less holdings from our whales over time. We did have a bit of an uptick here about 10 days ago, but after the 17th, we've began to move back down again. So on the Bitcoin side, we still need to see a bit more from the key stakeholders accumulating. However, What is good news is the fact that Tether, sharks and whales holding anywhere between $100,000 to $10 million, they're still going up just a little bit. USD coin, they have been accumulating once again after the big drop that they showed from mid-February to mid-March. BUSD, kind of the same thing, nice accumulation. DAI showing some great accumulation right now. That's been a big jump just over the past 12 days or so, going from 36.2% held to 38.2% held. That's a big 2% jump. True USD, on the other hand, still very down, and USDP still very down as well. But those two assets are not quite as huge as the other four that we just showed. Tether especially being the most important. It's indicating that buying power for whales is still quite high, and they're mostly just waiting for the right time to begin dipping their toes back into crypto again. Maybe they're waiting
also it shows there is no buy the dip narrative. Yeah, it means there is quite substantial amount of these holders who think the market will go lower, which is good from behavior point of view.
Mm-hmm.
Yes, but we will see. It might change the moment we build bottom, be it today or tomorrow. I don't know, like temporarily bottom, let's say, and then they start recovering. If we see decrease in stablecoin holders from sharks or whales, it means they're convinced this is a bottom and we go for the higher levels. Then it will look risky. That's why I mean, we need to observe in a few days what will happen. At the moment, the bottom built and it recovered. So what is the action of wealthy retail people? Yeah. But even now, it can reveal something. Mm-hmm.
Yeah, as you mentioned, Maxim, it does look like dip dimensions are barely evident right now compared to some of the past times when everyone was saying buy the dip on very small dips. Now we have a pretty legitimate one going from 30.9 at its peak down to 28.0.
Select dominance just to make sure, because of this Twitter and everything keeps changing. I would just talk today with our social editing. It's really, I think when we survive and we're building a lot of complex now engineering stuff, we will probably be left as the only social data provider. It's so complex now.
Yeah. So it doesn't look like there's a big difference. It's still very low, even on the dominant side of things.
Yeah, it doesn't look big. If you take, I don't know how long, 6 months. Let's say, I don't remember when was the last time call for buying the dip.
Yeah, we had a lot. This was when the FTX collapse was happening, so a lot of people were.
Then it got quiet after this, because it was fundamental.
Mm-hmm. And technically, they were right. I mean, if you bought in right when the FTX collapse was happening, that was right around at the bottom, 17K or so.
But the way we use it, the way we use it, when the crowd stop talking about buy the dip, there will be another opportunity a bit later on, sometimes weeks, sometimes 2 weeks, where there is a bottom, but no one is talking about it. This is the time. I also need to be honest, it's difficult to catch because crowd have the feeling mostly apathic, like not interested.
Right.
And you and me will have similar. It's not so easy to overcome. But this data will reveal. If you by chance open this chart and then say, oh, wait a second, we used to have 1 or 2 weeks ago by the dip narrative, there was terrible fundamental use and now no one is talking, maybe it will trigger you. You will remember what is shared here and you will buy and it will be a very good time. Yeah, making a new low or revisiting the low levels and the lack of talks how to buy the dip, it's a very good sign.
Yeah, and that's kind of why I like this chart as well, because on top of buy the dip, you can see kind of a combination of positive mentions versus negative mentions here. The blue bars here are buying, bottomed, or bullish, and the red bars are selling, sold, topped, or bearish. And you can see we've kind of fluctuated a little bit back on the 17th more toward the beginning of the week. Lots of optimism. And the price actually ended up agreeing and going on a bit of a bounce the next day or two. And then more optimism came after a little bit of a drop here. And then suddenly fear, where the red bars are actually exceeding the blue, which doesn't happen very often. And prices have gone down since. And now we are back with a big blue candle showing there's a lot more optimism as of my morning, Maxim's afternoon, showing a little bit of renewed hope that going into the weekend things are going to look better. And it could be a bit of a Friday thing because we see that prices generally toward the very end of the week tend to get a bit more bullish right before the weekend. You know, people put in their paychecks into crypto, that kind of thing. But it's interesting to see how close together the buy and the sell bars are right now. More often than not, I see sell bars much lower than this compared to what's going on the buy bar side of things. So it's really just reflecting a lot of uncertainty right now. And you know, according to that poll that I mentioned, a little bit of FUD as well, because like we're seeing here, you know, almost 2 out of 5 people believe that we're actually going to hit 25K before 30K. All right, so besides the whales here, Maxim and I, I'm so sorry about my cough, guys. Maxim and I have been talking a little bit about the social dominance of Bitcoin and its emergence as a more highly discussed asset than it's been for a while now. And it really changed ever since the cross above 25K a little over a month ago, about 5 weeks ago. And I'm still seeing it's quite high. And typically, as I'll demonstrate here, going back to 2020, when you see Bitcoin's social dominance high, it is an increased chance of big rallies. You can see when it was consistently above this 20% line, that's when we saw some huge numbers because more discussion related to Bitcoin instead of the Pepes and the Doges and the Shibas and assets that are a little more just sentiment driven. That's when those big actual market pushes happen. And you typically want to see Bitcoin pushing first and then distributing profits into the smaller assets in crypto. So you can see how obviously, you know, late 2020 was where things were really booming. Everyone was talking about Bitcoin hitting these then all-time highs, obviously getting to a 64K all-time high, I believe, in April and a 68K one in November. But look, right when we got to that November all-time high, Bitcoin was slipping and a lot more people were talking about those big altcoin gains and which one they should get into, new assets popping up right and left that didn't really have much to add to the crypto ecosystem. And we see this big fall. And it really wasn't until July 2022 where we saw this big amount of capitulation. It lasted a short amount of time. And then everyone was like convinced that the rally was back in full effect. And so they started talking about altcoins again right here. And what do you know? That greed ended up having an effect. Prices fell down again, and they stayed down and really didn't pop back up until about a month ago, where Bitcoin social dominance is now basically duplicated what we were seeing in June and July when we were starting to see that small recovery. So it's a very interesting time right now, and we have to see if social dominance for Bitcoin will stay high, traders stay focused on the right thing, at least according to what tends to historically pump markets organically instead of inorganically. Good spot long term, obviously being 1 year from the halving. It's important that people stay focused on Bitcoin and don't stray too far away from that. And if that's the case, I think we're still in a good spot long term. But short term, as we mentioned with some of the other metrics, there's still some concerns to worry about. And if we can transition now into some on-chain metrics, I think there are some telling stats that will help predict at least how these next couple of weeks will go if all else stays equal. And there's, of course, no big breaking news that could shake things up in a matter of a second. So looking at trading volume for starters, I still have these indicators pointing from my discussion with Maxim yesterday, but you can see how trading volume has really fallen off fast. It's actually at its lowest point right now since January, which is interesting considering, Bitcoin is significantly higher than the 18K level that it was at the last time trading volume was this low. Yeah. And
well, yes, partially it's, I can understand small part of it that people move to altcoins or shitcoins, how you call it. But it cannot explain such severe drop. It means those who bought saw no reason to buy, and those who were potentially on buy side had no money or whatever. So what do you do when you're hanging on a cliff? You just go down.
Yeah.
And the next kickoff, we should see increase in volume, some level of profit taken, ideally panic, but I'm not sure if I get to panic. Not so easy, but maybe, God knows. That will increase. That should increase trading volume, and then we might see redistribution. Weak hands given to strong ones. That should happen. As long as we don't see increase in trading volume or on-chain activity, I would stay away. Still,
Yeah, and the rule of thumb with trading volume is trading volume tends to rise into the path that traders are most interested in. So if we see a big drop off as prices are attempting to rise, as at least for the last, month or so, that's kind of been the case. There's been very short leg ups and then a leg down, but trading volume has just fallen further and further, showing that traders are having a tough time sustaining this rally, and they're not quite showing the same interest level that they were when there was that initial rise a month ago. So for that reason, if prices start to drop and trading volume rises, that could actually be a bad thing because it means volume is gaining into a new trend, and that new trend has more legs if it has volume to back it up. And of course, on the on-chain transaction volume side, really briefly, we're not really seeing anything there. Maybe a very small pickup here in March, but it's kind of topped out and falling back down right now. So compared to the end of 2022, when traders were much more hanging on a thread with every single move, it's kind of gotten a lot more silent, and that's why you see this trend on the social volume side with just less and less discussion over time in the markets. I'm trying to see if it'll go 3 months. Oh yeah, so this is when we did the Twitter thing. So we really only have the last 5 weeks or so of data, but it has been a very small drop here just over the past month. So even with Bitcoin being significantly higher than where it was at the end of 2022, that hasn't been enough to spark a lot more discussion. And it seems as though this is kind of a dead time relatively, where debates and conversation and speculation about the markets, they're just not nearly as prevalent as they were a year ago or even 6 months ago. Even with the Twitter API changing, it would still look like there's a natural fade going on because that was the trend for kind of the last year or so. So similar to trading volume in that respect. Now let's take a look at daily active addresses, because we did have a few encouraging looking spikes here. April 4th, a couple weeks ago, we saw a 1.12 million DAA spike, and the trend line here, if I highlight
that was if you compare with CoinEdge, both Bitcoin and Ethereum has quite severe CoinEdge consumed in one case because of transaction, and another case because of all the coin moved. So there was a quite strong inflow, and they moved to exchanges, most of them. So actually, this transaction spike you see that was quite a strong selling pressure. I don't remember now from top of my head the numbers, but I remember Ethereum moved someone like 600 millions to exchanges. Very very OG style Ethereum, like from, I don't know, 5 or 6 years ago. Very old
Right.
moved, yeah. And it's a kind of a good sign in the midterm. So I'm happy to see it. If someone takes profit for so long hold Ethereum, it means only one. He sees little reason Ethereum be, let's say, at 4,000, unless someone needs urgently money. Okay, that's another reason. Still seeing someone taking profits when we're just 100% from the bottom. It was a good, but of course it's a very strong selling pressure. So might be also market makers start moving their order books, because who is going to absorb 600 million here? And these deals are done, and the news spread very fast. So now I think this 100 millions absorbed, market took it. So now it's getting possible to rally again. Yeah, but in Bitcoin the same, was quite long, quite big movements of old money.
Yeah, I was going to say we posted about this just a couple days ago about Ethereum, but it's still relevant to Bitcoin as well. And as Maxim is talking about, we saw this mean dollar invested age line going down, indicating there was some serious dormant movement. And you can see several spikes over the past 6 months showing when dormant circulation was suddenly going crazy. And in each of these 4 big spikes, you can see it was right near a price bottom, and then prices bounced right after, almost perfectly every time.
Yes,
this one was a bit of an
true.
exception.
First, yes, there are always exceptions, so nothing looks 100%. And here it's
Right.
very important, Brian, to put it in the context. That was a long, relatively long, actually longer, since 2 or 3 years, a bear market. So the holders should have capitulated or panicked at some point of time. And these spikes, after 6 to 12 months of prices going down, means reversal or buying opportunities. Now, after we've been recovering for how much, 2-3 months, the same spikes might mean there will be quite strong selling pressure, so temporarily going down. We always need to put in the context. But still, midterm, I would agree, even if we put in the context and say, okay, short term, now it means reversal, going down. Midterm, I would say it's not a bad sign at all. And to put it shortly, coin age consumed most of the time. In our experience, 80% of time, it's volatility and either reversal or after short drop, good buying opportunity, but it's always volatility. So if you experienced or doing some option strategy, this is your indicator. Because I think in options, what you trade is volatility. Coin age consume almost never disappoints.
Yeah, agreed. And I put out this article a couple days ago after our colleague, the other Maxim on our team, pointed out these 5-year address moves for Ethereum. And you can see this was one of 2 addresses that essentially did the same thing. They suddenly accumulated 150,000 Ethereum back in November of 2018, held it for 4.5 years, and then dumped it just a couple days ago. It's too small of a sample size to say that these whales are, the smart money and they knew that this was the bottom and this was the top. I wouldn't say anything like that. But it does, these 2 addresses were the direct reason that we saw this big dormant circulation spike and a continued drop in the mean dollar age curve, because when there's such large amounts of money moving after sitting in addresses for 4.5 years, that's exactly what sparks these curves to go down. And if we continue to see a downward slope for the mean dollar invested age of Ethereum, then other assets may follow. It'll be interesting to see if Bitcoin does so. It hasn't really had anything quite this extreme, but in almost every bull rally, like legitimate long-term bull rally, we have seen it coincide with the mean dollar invested age line dropping down and the average age of coins getting much younger. So it's definitely something to keep an eye on. I'm glad you brought that up, Maxim. One other thing, while we're looking at both Bitcoin and Ethereum together, we were talking about this yesterday, the ratio of transaction volume and profit to loss. I'm going to zoom back into the last 3 months. We'll even do 6. Let me switch the price to just a line for now. So check this out. The ratio of on-chain transaction volume, it's been very high in profit for most of the past 4 weeks or so. You can see Bitcoin was quite high here, dropped back down. Ethereum had a big profit-taking spike last week, and now they're both very low once again. We go like to the last year. Yeah, so right now, if this ratio holds, it'll actually be the biggest loss-taking ratio over the past year. It's a small sample size for now. I expect it to move up a little. But in most cases where you've actually seen these negative spikes, it's a good signal that we could bounce shortly after. Going back to June 8th, you saw that this was right around the bottom. Same with November. This was right after the FTX collapse, right around the bottom, still a bottom here. You know, at minimum, you see that prices don't really continue to drop when you see these big loss-taking spikes. And then this one was a perfectly timed one here right around the beginning of March. And then we see a big blast off. So I like the fact, I mean, we're not rooting for everyone to lose money, but from an indicator standpoint, in a zero-sum game, you need to see some losses begin to accumulate in order for prices to resume moving upwards. And that's exactly what we're starting to see right now. So it's another good short or midterm signal for the markets that both Bitcoin and Ethereum are registering a lot of losses on the on-chain side at the moment. And, you know, speaking of average trading returns, this was a modified model that Maxim and I discussed yesterday, where instead of looking at, you know, the really short-term 1 day and 7 day and the super long-term 1 year MVRVs, we thought it would be a good idea to compress everything and just show the 30-day, the 90-day, and the 180-day MVRVs and what their divergences are altogether. And you know, this model likes to do a refresh whenever I open its window again. So I'm going to give it a couple of minutes, and when I come back, we're going to explore what some of the most overbought or underbought signals are in the market right now. And you'll see that most of them are showing a pretty clear underbought signal because altcoins have been in such big pain over the midterm cycle. So let me come back to that, give it a few minutes. And in the meantime, let's look at a few more Bitcoin metrics. And while we're talking about MVRV, we'll look at specifically Bitcoin's 30-day MVRV and what's going on here. Right now, the 30-day MVRV has calmed down a little bit. When we updated you guys a week ago, let's zoom into the last 3 months. When we updated you guys a week ago here on the 14th, it was still quite high, sitting at around 7%. And now it's actually dropped into negative territory at about negative 3%. This is the lowest the 30-day MVRV has been since March 11th. So we're talking about a 6-week low on the MVRV side of things for the midterm. And then on the long-term side, it's actually still quite high at plus 23%. So we have a good sign from a short to midterm perspective, but you still have to be wary over the fact that long-term holders, the patient ones who've been in since, you know, April 2022 and been active, they're still well in profit. And we'd much prefer a scenario like this you can see what happens when both the midterm and the long-term MVRVs are both negative at the same time. That's when we have a historically great time to buy into Bitcoin or crypto in general.
Yeah. Well, let's say the risks are lower and lower with every 1 or 2% Bitcoin on short long-term MVRV going lower, your risk are lower. It feels different, yeah. It feels like risk increasing, but think about from behavior point of view, risks are disappearing because more and more short and long-term hodlers are in losses.
Mm-hmm.
So it means they will not sell before we cross the zero. You're buying at the levels which more and more likely experience growth compared to those who bought before. So, and yes, true, at the moment it's minus 3%. That's why I'm saying it's a short term because historically we're like a bit deeper levels, like 10% is good. Yeah.
Right.
So I say short term, yeah, we can rally, but ideally, if we would base our decisions only on this indicator, exactly, we would wait longer. But we never base decisions just on one. So it's a combination.
Yeah.
Yeah, it's going in a good direction. Yeah.
Absolutely. And if for some reason the 30-day MVRV gets all the way down to this line, this is kind of that opportunity zone, minus 15% or below. Those are around the historic times where Bitcoin tends to bottom out, not get too much lower, and you can have a very good opportunity to buy if it gets there. And alternatively, when we were back right around here or above, these are the times you want to be a little bit careful because it's a danger zone for Bitcoin where historically tops occur and prices tend to reverse downward. So we're kind of in the middle of that for the short midterm. And as Maxim said, for each percentage that we're above or below that 0% line, there's either added risk or lessened risk like we're seeing right now. Moving now to funding rate, let's look at our funding rate model here instead. Now, just a couple days ago, we were actually seeing quite a bit of red. Almost all of this was showing there was a slight long bias, and it's kind of mellowed out just a tiny bit. And it's looking mostly neutral right now with negative funding rates popping up at least for a few like Digibyte, Tron, Storage, just a few outlier assets that aren't even really in the top 30 or so. But if you look at Bitcoin here, it's pretty much right at neutral, no real skew toward excess longs or excess shorts. Ethereum, you see a slight bias toward longing, but it's very, very slim. And then you see just a few like Bitcoin Cash, Litecoin, and XRP that are showing some excess longs. But from a funding rate perspective, unlike a month ago where most assets were showing either neutral or a little bit of shorting. Now it's kind of the other way around. It's either neutral or a little bit of longing. So slightly a little more greed than we saw, which isn't ideal. So even though we have a poll like this that's showing that more people are expecting a drop than a rise, as far as where people are putting their money where their mouth is, it's a little more on the longing side right now. And it's always interesting. I actually put up an article just a couple days ago talking about whether traders are acting the same way they're speaking right now. Are traders putting their money where their mouths are? And I highly recommend you guys check it out. You can see that weighted sentiment for Bitcoin, Ethereum, Binance Coin, and XRP, they've all kind of gone down over time, going from positive sentiment to kind of neutral with a few in the negative territory and a few on the positive territory. And then we already discussed that one. See, this was actually just 3 or 4 days ago when we had a huge long bias, and that was right when prices really started to correct down from 30, almost hitting 31K and going down to 29.3K or so, or 28.3K, I should say. So you don't want to see something like this where most of them are in red. And at least now, looking at the live look, they've at least calmed down a little with still a little bit of a long bias. Thank you for the requests of assets, Balresh. We'll jump into those in just a moment. A few other things to look at here on Bitcoin right before we do. You see whale transaction count. It peaked about 10 days ago with a whopping 14,647 whale transactions of $100,000 or more. That was its highest of the year, and it's calmed down, mostly back in neutral territory. The 1 million, yeah, pretty much in a normal range at the moment. So nothing special going on the whale side. We did already talk about how the overall key Bitcoin tiers holding between 10 to 10,000 are moving down at the moment. So it's still a bit of a concern that the big key stakeholders in Bitcoin are not accumulating. They're continuing to dump. We talked about the on-chain volume and profit to loss already. And then this is the mean dollar invested age line that Maxim and I were referencing. It's still moving up. We did have this mild downturn just as prices were topping about 2 weeks ago, a week and a half ago. So if this starts to match what Ethereum is doing, which is still moving down at the moment, that would be a great setup for the next few weeks. But right now, dormant coins are not moving for BTC the same way they are for ETH. Network realized profit loss, nothing special here. We had a few pretty big spikes over the past 10 days, and now they've kind of neutralized now that prices have dropped. Look for a few big negative spikes like these as a sign that a turnaround may be happening soon because traders are realizing a lot of losses again. This metric is a great one to combine with the ratio of transaction volume and profit to loss, by the way. And then as far as exchange supply goes, we're actually moving back up. It isn't a huge uptick or anything, but we're back at 6.74% of Bitcoin on exchanges after being as low as 6.64 2 weeks ago, and the year low got down to 6.52%. So again, this was a great indicator that we were about to hit a historically good buy time for Bitcoin. Look for this kind of measure once again with MVRV going into the negative, supply and exchanges going way down. Those are what you want to look for as a great buy signal. And social dominance, as we mentioned, it's still quite high for Bitcoin, which is a great sign. Weighted sentiment actually dipped below into the negative territory. This is the lowest it's been in about 6 weeks. So that's a good sign that something like weighted sentiment is matching what we're seeing on this kind of poll on Twitter. And then finally, the NVT model I want to look at really briefly and show you that we are still not quite seeing enough circulation right now to justify that a big breakout could continue. Yes, prices have been able to rise despite the red bars, but you can see that things start to get very iffy when we have these long stretches of bearish divergence indicating that there is not enough unique tokens moving to justify the current market cap. So expect, if red bars continue to pile up, it's going to be volatile for Bitcoin. We may not see just a huge plummet like we did on these earlier 2018 and 2019 bear markets, but we've seen enough to know that red bars are still bad and indicate that the circulation isn't where it should be, thus resulting in concerning volatility that is unpredictable at best and very negative at worst. And then on the Ethereum side, it's looking about the same. 5 straight months now of red bars. Even with prices rising, we have to be a little concerned because unless you see green bars and prices suddenly go like this, you're not going to see anything like this when circulation is this low. It's going to be a lot of uncertainty in the markets, and any bull rallies have to be considered to be short-lived until circulation picks up there. All right, so with that said, I think Maxim and I can look at a few requests here. Check out the Discord where Balresh posted And he mentioned ApeCoin, Solana, and Cartesi. It's a good mix of assets that we can check out. So let's start with ApeCoin and see what's going on there. All right, so as far as trading volume goes for Ape, it's dropped off pretty considerably over the last 10 days or so. It peaked to its highest level since January here on the 12th, and this was about a day or two right before the local top of 466, and then it's dropped back down considerably ever since. Transaction volume is pretty dormant at the moment. So yeah, not a lot. I guess a good sign would be during this price drop, volume isn't rising. That would be a sign that the trend could continue for a while.
Yeah, and can you exactly like you were pointing out? That's a good point. Start seeing divergence on increasing interest on falling price. Can you increase resolution to see, like, take one last month? Maybe on smaller scale can see something, even though it doesn't look like that. Take this, yeah, like this time.
Mm-hmm.
And what is it now? 1 hour?
These are still, yeah, 1 hour per bar.
Okay. Yeah, need have probably some patience.
Sorry, 1 sec. That was actually 1 day per bar, so I'm switching them to 1 hour.
Mm-hmm. Oh, this one.
Rid of that one. Yeah. So yeah, looking at the hourly volume, it's pretty consistently moving down once again, with not a lot of on-chain transaction volume.
So far, yeah. Remember, it can change anytime. Just need to keep observing. And then on the biggest time scale, we can see, as always, distribution on how token holders, those who are holding less than 1,000 in USD. Then I don't know. I usually like to take 5 to 50,000 if it's possible by our groups, and then everything above 100,000. So
yeah,
just
let's take a look.
Yeah. Mm-hmm.
So if we look at where the sharks and whales are kind of located for Ape right now, we should see right around 10,000 to 100,000, all the way up to maybe 10 million. So these three tiers are going to be the big key stakeholders, the smart money for Ape that kind of dictate where prices move next. Here we go. I'm going to make this a bar really quick. And let's zoom out to the last year. So yeah, there's quite a bit of drop off going on, and they've been dropping since December, really. And prices haven't been too impacted, but Ape, obviously, a lot of prices, you know, Ape competitors out there, they've been going like this. This is what a lot of altcoins have been doing as far as price goes over the past 3 months or so, while Ape has been pretty suppressed. It's been one of the more underperforming assets since the start of the year.
Left side move a little bit to the right so that we are not affected by this price growth and drop on the left side, just to decrease a little bit time frame.
Oh, just right here? Sure.
Yes. And we'll see trend more clearly. Okay. Yeah, difficult. Looks like difficult. Exactly because of due to the reasons you are saying. When whales are dumping, it's hard to grow. Though this red group, after decline in what was it? December. Now they're kind of at least stable with attempt to grow. If it will evolve into anything more meaningful remains to be seen. But there are some who are trying. Okay.
Yeah, they're at least moving in the right direction.
Yeah, and crowd. Smaller.
Let's see what they're doing on the social volume side of things.
And also small hodlers.
So let's look at just social dominance because of the Twitter API change. Yeah, it looks like Ape is barely being discussed right now. It's very under the radar at the moment compared to how much it was being discussed, uh, a year ago, especially when Ape was way up, got up to nearly $9, and as it's fallen, it's just being discussed less and less in crypto circles at the moment. So certainly not the most popular altcoin at the moment. And then weighted sentiment does reflect that. It's mostly negative, people doubting ApeCoin's viability and its price future right now. So that's actually a good sign and does increase the probability of some upcoming bounce the longer this weighted sentiment negative stretch goes on. And you mentioned small holders, Maxim. Really quick, while I'm here, I also see that supply is still staying pretty low. It's been low for the last 4 months, rising just slightly, but this is a very small number. Supply and exchange is at just 2.39%. So I don't know if Ape is being used in DeFi too much or not, even
Yeah,
though
probably it's in some decentralized protocols.
yeah. So that's actually one of the lowest percentages of supply that I'll see in altcoins. They rarely get below 5%. And going back to small holders now, let's just take a look at some of the very smallest here. These are always going to go up because there's kind of the mini addresses. Let's group them together. 0 to 1 ape. And then we'll compare that to 1 to 1,000 ape. These will kind of be the dolphins. And then 1,000, these are kind of just these sharks. We'll just do everything else, split them into 3 easy categories. Sharks and whales. Yeah, I mean, 1,000 plus owns almost all of the supply, but you can kind of get an idea of what the dolphins are doing. They have been accumulating a bit over the past 5 weeks. And the small holders, you notice, Maxim, they've kind of stopped accumulating over the past 2 weeks here. So that's actually a good sign, considering the speculative tiny holders aren't really being speculative in any way toward Ape anymore. They've just kind of come to a standstill, and that's generally a bullish sign. I'm curious if it has development activity. No, we don't have data for it, unfortunately. I would be very curious to see if ApeCoin actually has some development activity. That would be a nice thing to take a look at to see how viable their coding team actually is. But yeah, that's Ape for you. I think that's a good suggestion, as it has been one of the more struggling altcoins throughout 2023 so far. So savvy traders out there might be expecting that it has a little bit of a makeup time coming up in the near future. Now let's move over to the second suggested asset, which was Solana. Now, Solana is not an ERC20, folks, so we're not going to have as much data here for it, but we do still have trading volume. So let's take a look at what's been going on here for the last year. And we do see that trading volume has been declining, ever since this big spike here 3 months ago. We've been seeing less and less volume on the Solana network. Not really too meaningful, though. I think that Solana's kind of just been bouncing up and down. It's another asset that didn't really see the best performance compared to the rest of altcoins. I do remember in early January to mid-January, it did go on this big run. Since December 29th to its peak, we'll just say 1 month later, yeah, the price of Solana during that stretch went up 211%, so more than 3x'd during that stretch. But after that happened, if we look from January 29th to present day, it's actually down 14%. And a lot of prices are still up quite substantially if you look at some other altcoins in comparison. So Solana's been struggling a bit, and trading volume, not surprisingly, just like ApeCoin, has kind of faded over time as traders have gotten impatient and looked elsewhere. Funding rate side, it could be interesting to look at just the last 3 months here. And if we look at Binance, we'll just take off DYDX, look at Binance. And yeah, this was a great signal right here. Look at how people started to get a lot of FOMO just 4 days ago, right near the local top. This was the highest Solana had been, $25.70 since mid-February. So we were looking at a 2-month high here, and all of a sudden we saw a lot of excess longs opening up, people trying to leverage and get a little bit of greed.
Finally, they got convinced.
Yeah, they got convinced right when the top hit.
This is the way, and this is indeed the way, but in opposite direction.
Yeah. And you can see similarly back here in mid-March, lots of FUD. And that was the great time to buy as everyone was getting their shorts liquidated here. Just like we had long liquidations, and that pushed the price down more than it otherwise would have gone down.
Yeah, so outcome of actually very nice chart. I didn't even know you have so nice colors as always you select. If we see, or whoever use it, this spikes down, which can be seen in this chart layout back in March and February. This is where you can try your risk again with Solana. Just make sure it's working this day so you can buy it. Anyway, if buy an exchange. This is seems to be a good setup. And for Solana still, it's a sentiment or emotion-loaded coin. So when the people start FUDing or shorting, quite often it's a good sign. So far was 2 times very good one.
Yeah.
If even the last chance to buy wasn't so much shorts driven, so you would have missed it. But you will miss anyway buying opportunities, as from time to time. Important is to maintain your risk control as high as possible, and buying on such negative funding rates, you maintain your risk.
Yeah, totally.
It cannot go much lower.
And with funding rates, it's always about extremes too. You don't want to see, if it's a minor blip like this, things can go either way. But it's just like MVRV, the higher percentage from zero it is, like here, the more probable a correction would occur. Just like you saw here, right at the top, way back in late January, huge spike above 0%, and that greatly increased the probability of a correction. This one was more of a mild one, but you can see that also timed the top perfectly. And then these two big negative ones. I agree with Maxim. I think Solana in particular is a really good asset to look at for funding rate, and some other assets too, like Dogecoin or even ApeCoin, where they're very sentiment driven and not so much by onchain. Those are where you really want to focus in on funding rates, because any extreme shorts or extreme longs can be highly predictive for where prices are about to go next. Just to see if there's anything else. I know Solana is always an interesting subject when it comes to development activity. Before we look at it, we can also see that social dominance has been pretty normal. It's actually kind of dropped back down ever since the big FUD that occurred in late December. And a lot of people were talking about like the latest Solana outages because the network goes down from time to time. And I remember people talking about how it was going to go straight down to zero after it cracked below $10. But that ended up being the bottom as everyone was doubting it, and it jumped back up again. So social dominance is pretty much dormant at the moment. Weighted sentiment right about even. And then development activity, as I mentioned. There was a big article that came out 3 to 5 months ago, somewhere in that range, that talked about how they could be faking their development activity, which is interesting. I don't have much of an opinion about it, but it did kind of shake the crypto world a bit when they learned about that. And we do see over the past year, Solana's dev activity has come down quite a bit, where it was getting over 240 submissions a day, according to our data, and it's now down to about 72 to 73. This is probably more realistically what it actually is, which is still a very high amount of development activity for a crypto, for an altcoin. It's no longer a top 10 dev activity asset, but still looks to be fine overall, and it does have a dedicated team working on improving and innovating the asset. So that should be good overall. And then while we're talking about development activity, I always like to look at what the top 10 or top 20 assets in crypto are doing and which ones they are for the dev activity side. We can confidently say Ethereum should be one of them. We'll let it load for a few seconds. And I expect that we'll see the usual culprits of Polkadot and Kusama and Cardano. And then I know there's like Filecoin that'll be up there as well. Any second now. There we go. So we got Kusama, Polkadot, Cardano as the top three as expected. And then look at Cosmos having tons of GitHub activity over the past 30 days. Internet Computer right behind it. Hedera being up at number 6. That's a bit of a surprise. Status. There's Ethereum here at number 8. Vega is an interesting one that's cracked the top 10. And Decentraland has always kind of been in that 6 to 10 range. Aptos, Chainlink, IOTA, Flow. Osmosis is a new one I haven't really seen up in the top 20. Filecoin, Optimism also hasn't really been in the top 20, so their team is really working hard. And then Avalanche, 2 different avalanches, both on the Ethereum network and Binance Coin or Binance Chain network, and then Multiverse X at number 20. All right, and the last one, really quick. Let's look at Cartesi as the as one of our viewers requested, and see if there's anything we can check out here. CTSI. Switch to our main template, and let's see what's popping up. Oh yeah, so Cartesi, I can see why it's being requested. It's been on a huge run over the past week. It was sitting 10 days ago. It was sitting at a low of 15.1 cents, and now it's up at 26.2 cents. Its price has jumped 73 cents at its very top, or 73%, I should say. At its very top, it was at plus 105%, so it more than doubled at one point, and the trading volume went nuts. Transaction volume went nuts. Let's zoom into just the past 6 weeks or so. And we clearly see that there was a trading volume rise. That's what you want to see as prices are going higher. And then right here, just over the past 4 days or so, it started to diverge and volume's gone down. There was one more leg up and price has fallen dramatically ever since that final leg up. I wouldn't be surprised if it continues to drop unless transaction volume and trading volume start to go a bit higher. Same with daily active addresses. Back on Sunday or so, we had this huge spike of 436 active addresses. Curious on the network growth side too. Let me add that in. Yeah, network growth, pretty much the same thing. We had 151 new addresses created on the Cartesi network after it was really just averaging anywhere between 20 to 30 for the previous weeks. So network growth was super high. It's dropped off a little. Yeah, it does look like there's a lot of local top signals that occurred here. And unless we see a second wave of active addresses and network growth, I would be concerned that Cartesi is just going to continue to bleed and at least fall back to earth after having such a big ascension, while other assets were mostly dropping during this time. MVRV, as you would expect, the trading return, average trading returns went nuts. It was way up at plus 38% back on Tuesday. It has fallen back down though to just plus 11%. So it's actually below that danger zone now. I'm still concerned about the 365-day MVRV being so high at plus 36% at this time. Whale transactions just absolutely jumped to pretty much all-time highs. I see that the 1 million, look at how precisely this was, guys. The 1 million plus whale transactions, they exited right at the top. 30-day, pretty much right at, or sorry, $100,000 or more, they exited right afterwards. You can see when they started accumulating too. Look at this huge whale transaction spike back as the FTX collapse was happening. And if you bought in when these whales did, you'd be pretty happy right now, because they, as of right now, they would have been up 150% even after this mid-sized correction that's happened the last couple of days. So sometimes it's just really obvious when it's a whale accumulation versus a whale dump. You'll typically see the accumulations happen right after a big wave down. Like this one, there could have been an accumulation. If you saw a big spike, that would have been a good bottom signal, but there wasn't a bottom signal. But this drop, there was, and that was an ideal time to buy in, just as this was an ideal time to take profit along with what the whales were doing. And with Cartesi being priced at about 26 cents right now, we can look at the 100,000 all the way up to 100 million tiers as the key addresses to look at. Yeah, so the gray here, this is the more so the sharks, and they're still accumulating pretty aggressively. They're holding about 4.7%. However, the smaller whales have been dumping pretty consistently. And it looks like this recent rally was really driven by the larger whales holding 10 million to 100 million. 1 week ago, they were holding 31.6%. They got up as high as 36.5%. So yeah, they added about 5% of the supply all of a sudden. And if we look at price, you'll see what effect that had. Go. So yeah, I mean, right as they were accumulating, look at how the price just took off, and all of a sudden they take profit here just in the last 2 days, and the price has started to crumble. So yeah, this, I would say that the 10 million to 100 million tier is really the key one to watch, because they are the rally instigators, so to speak. Mean dollar invested age actually not really showing any good signs. It's mostly just continuing to move up. I know Cartesi is a relatively young asset though, so it might take a few more months before these long-term metrics have more meaning. Supply and exchanges, you can see how people really started to take profit here on the 18th, and they've finally moved their assets a little bit off of exchanges, and it's come back down below 9% as of the final or the past 24 hours or so. It does look like the crowd recognition took effect as well. Big social dominance spike here. Everyone was paying attention to this huge spike that occurred last week. And after it dropped off, we saw another leg up, and now social volume and dominance are near all-time highs. If I had to guess, it's an all-time high. Yeah, by far. And so right now, there's still a ton of crowd focus on this asset, which has me concerned because when the mainstream is FOMOing like this, it's a higher probability of a price drop. Weighted sentiment, as you'd expect, also very high because of all the FOMO happening on the volume and dominance end. And then Cartesi's development activity. There is a dedicated coding team, but it doesn't look like they have a whole lot of development on a day-to-day basis. So a slight concern there as well. So yeah, that about wraps it up, guys. I think we had a good comprehensive look at the markets, Maxim. Any final words you have?
Any final words? Yeah, only repeat what we said in the beginning. In the beginning, in 2 days, yeah, approximately somewhere Sunday. If things goes as we expect, relief rally, this is a moment to revisit matrix and see stablecoin holders tracks. Did they buy the dip? Are they buying the dip? Conversations on Twitter or mentions of buying the dip. That will be crucial time to make a decision. Well, Sunday, crypto never sleeps. And this is a final words here.
Crypto never sleeps. It's a good mic drop ending to our stream here.
Yes.
I love it.
True, yeah.
Well, thank you for joining today, Max. I think it was a great discussion, and I appreciate all the viewers for tuning in and hanging out with us here on a great Friday. I want to wish everyone a wonderful weekend. Stay warm and safe, and we'll see you back here in a week to see whether prices have been able to bounce back up. And I think we're at a very interesting time. Absolutely.
Yeah.
So thank you, everyone, and we'll talk to you soon.
Yeah. Talk to you soon. Bye-bye.